Good afternoon, and welcome to the January 2024 Market Outlook webinar. I'm Kyle Wilson, Portfolio Manager here at SIA Wealth Management, and today we're going to have a look at a few broad market topics, as well as take a look at some recent positioning and performance of our sub-advised lineup of mutual funds for BMO Global Asset Management. So today I've got 6 topics to chat about. First, we'll take a look at the state of broad equity markets through the lens of market conviction, and a story that we're all familiar with from last year. We'll take a look at the Magnificent Seven and see how market cap indexes fared last year and how they're positioned going into 2024. Additionally, we'll look at the sub-advised BMO funds, considering current positioning and relative performance and risk metrics. We'll also take a look at how the funds have done since the beginning of 2022. Over this time, we've seen several changes in our asset allocation and tactical positioning, ranging from maximizing equity exposure to completely risk off and back again. Lastly, we'll have a quick look at one of our more popular followed funds, the BMO SIA Focused North American Equity Fund, and see how that fund has fared relative to several category peers over the last couple of years. So to open the discussion, I just wanted to share this interesting chart that I came across, which shows on the right, NASDAQ CFTC net speculative positioning is at all-time highs. And the magnitude of the red bar in the top chart is the net long levels, which haven't been seen since as far back as 2016. In my opinion, I think this certainly suggests high conviction in the markets and potentially even overconfidence from market participants. However, we'll certainly soon see how it plays out. So one major story of 2023 was the impact of what they're calling the Magnificent Seven, which is the 7 largest stocks in the S&P 100 and S&P 500 indexes. On the left, we can see massive gains each year in 2023 from each of these stocks, some high double digits, some high triple digits. And on the right, we can see that the combined market cap of these 7 companies is greater than any single country outside of the United States. Just a really interesting frame of reference suggesting higher levels of concentration in market cap weighted indexes going into 2024. To put into perspective the impact of the Magnificent Seven last year, when considering the S&P 100 index, these 7 stocks combined for 27% of the weight in the index at the beginning of the year. However, by the end of the year, make up 40% of the weight of the index. The S&P 100 returned 33% last year in US dollars, and of that 33%, 26% came from the 7 biggest stocks, and only 7% came from the remaining 93 stocks. This is both a product of their weight in the index, but also the magnitude of their returns that we saw on the previous slide. As a result of this increased concentration, 2024 S&P index returns will be even more reliant on the results of these same 7 stocks. So continuing on broad market topics, here we're looking at trailing and annual returns for several major indexes. Last year and over the last few years, we've seen little divergence between all-cap Canadian and mega-cap Canadian equities. However, this is not the case for United States stocks. In the boxed area in the top table, we can see significant differences in the 2023 results from the S&P 500 index, the S&P 500 equal weight index, Russell 2000, and the NASDAQ 100. And despite the large differences in one-year returns, the 2-year return numbers still are not quite as far off. I think this might be better highlighted by the boxed area in the bottom table, which shows annual returns. And so apart from the Russell 2000, the strongest 2023 returns came from those indexes which had far worse 2022 returns. For example, the Invesco QQQ Trust, they're down 27 and then rebounded by 51%. Alternatively, the S&P 500 Equal Weight Index, RSP, was only down 5.39% in 2022 and an 11.84% in 2023, meaning that the rebound didn't have to be as much because of the downside protection that it played in 2022. Now, moving on from some of those broader market topics, we will have a look at the lineup of sub-advised mutual funds for BMO Global Asset Management and their positioning heading into 2024. So opening it up with the equity action call from SIA charts. So in Q4, the EAC returned to the green zone from the yellow zone, and this impacts our asset allocation decisions in all of the funds, which by the end of the year resulted in equity positioning being maximized once again after taking some risk off the table in Q3 2023. So here we're looking at the holdings and portfolio composition of the BMO SIA Focused North American Equity Fund. On the left, we've got the 15 stocks in the portfolio. To note, the portfolio currently holds Microsoft, NVIDIA, and Meta of the Magnificent Seven. NVIDIA and Microsoft were added in Q1 of last year and early Q2, while Meta was added towards the end of the year in Q4. Over to the right, we can see the asset allocation right now is 60% US equity and 40% Canadian, with a sector bias to technology, followed by industrials, consumer discretionary materials, and consumer staples. Here we're looking at the BMO Tactical Global Equity ETF Fund. The holdings on the left here, we've got the stocks and ETFs in the portfolio. The stock portfolio continues to be a strong component within the fund. Last year, Booking, NVIDIA, and Lind were all strong contributors. The portfolio is 72% equity, US equity, 13% international, and 5% Canadian equity. Additionally, you do see a 10% cash weight right now. There was a position that was sold at the end of the year that was replaced in the first week of January. It's a technology ETF, so that's why you see that there, but this was just a couple of days as replacement positions were assessed. All right, and here we're looking at the asset allocation changes over time for the BMO Tactical Global Asset Allocation ETF Fund. The equity component of this portfolio is similar to the equity component just discussed on the previous slide in the Global Equity Fund. But here I wanted to highlight that over on the far right of the chart, we can see that over the last few months of 2023, there was an increase in cash and fixed income through the third quarter, which you can kind of see as the green bars get a little bit bigger. This was then reversed in December as market conditions improved, where the green components got a little smaller, and we reallocated that back into equities. And finally, in the lineup, taking a look now at the BMO SIA Focused Canadian Equity Fund. The Canadian equity weight is back up to 100%, where the portfolio is sitting on a few solid gains from some longer-term held positions like Fairfax Financial, Stantec, and Constellation Software. The portfolio's highest sector weight right now is in industrials, followed by financials and technology. Next, we're going to jump into some peer comparisons, taking a look at each of the funds relative to peer groups using data from Morningstar. Now, first taking a look at the North American Equity Fund, we can see near and longer term performance numbers with a great start so far in 2024. The fund sits in the 4th percentile of the North American equity category, up 8.45% so far in January. And over the longer term, we can see compelling 3- and 5-year returns on an absolute basis, up just shy of 20% over the last year, and top quartile over 1 and 3 years. So now diving into 3-year risk metrics for this fund, we can see that the fund continues to deliver great risk-adjusted returns with below average risk and average returns relative to the category seen in the top left. In the top right, we can see that positive alpha of 2.43 far exceeds that of the category, as well as a category beating Sharpe ratio of 0.51 relative to the category of 0.26. Capture ratios are also compelling with a 43 to 25 upside to downside capture ratio. And overall, these risk-adjusted metrics suggest that the fund is a great component within an equity portfolio in order to manage risk while still seeking strong absolute returns. Also off to a great start in 2024 is the BMO Tactical Global Equity ETF Fund. The fund's over 5% return so far this year puts it in the second percentile versus peers in the Morningstar Tactical Balance category. The fund sits in the top quartile of the category across all trailing periods, displaying over 8% annualized return over 5 years, which suggests strong absolute and peer-adjusted returns, both recently and over the longer term. And now looking at the 3-year risk-adjusted metrics, we can see average risk with above average return relative to the category. And again, we see a positive alpha and category beating Sharpe ratio of 0.28 with a compelling upside and downside capture of 69 to 46, once again highlighting the risk management benefits of true tactical. Next up is the BMO Tactical Global Asset Allocation ETF, which sits in the top decile year to date and over 1 year with second quartile longer term absolute returns. Looking at the 3-year risk reward here, this fund sits in the below average risk bucket with average return relative to the category, and once again delivering a positive alpha and Sharpe ratio relative to category average, and a 60 to 51 upside to downside capture ratio. Last, we'll have a look at the BMO SIA Focused Canadian Equity Fund, which is also off to a great start so far this year with first percentile returns in January. Over 1 year, the fund sits just outside of the top quartile, and over the longer term 5-year, right now it sits in the third quartile compared to the category. However, the absolute return is not far off of the category average, which in my opinion suggests a pretty tight spread across the various quartiles and a gap that could potentially continue to be closed if we can continue to build on this strong start so far in 2024. And while the risk metrics here for the Canadian Equity Fund are not quite as compelling as the other funds given the year-end returns, however, with a great start this year, I hope to see an improvement here at the end of January. While still at the end of the year, category beating alpha with significantly lower risk than peers still suggests compelling risk management effects, which can also be seen in the capture ratios of 44 upside to 34 downside. Now I'd like to turn to an intermediate term view of these funds, where the last couple of years has been a volatile period. We've seen the EAC start in the green zone at the beginning of 22. This is about the same time that many markets peaked before falling in 2022, with the EAC moving through the yellow zone into the red zone, and then by the end of the year back up into the green zone. Last year we saw equity markets stage a large rebound, and into 2024 several major indexes have exceeded the highs set at the beginning of 2022. And I wanted to highlight that the defensive allocation in 2022 positioned all of our funds really well for 2023 and into 2024. So here is a performance chart for ZFN relative to a 50-50 benchmark of Canadian and US indices. We can see that over this period, the fund has managed to deliver compelling absolute returns and quite a strong outperformance relative to the benchmark, all while managing risk throughout 2022 and 2023. Now, similar story for the Tactical Global Equity Fund. While the absolute performance here isn't quite as strong as the previous fund, I still feel really strongly about the risk management from this portfolio in 2022, which did position us well into the recovery for 2023. And so far in 2024, the gap continues to narrow. The asset allocation fund here also shows the value of risk management in 2022 with significantly lower drawdown as compared to the benchmark, all the while keeping up with the benchmark recovery into 2023 and so far into 2024. And lastly, having a look at the Canadian Equity Fund over this period, we can see also here that there were strong risk management effects in 2022 with a good recovery in 2023 and into 2024, and on an absolute basis, keeping up with the TSX Composite Index. And lastly, I just want to wrap this presentation presentation up with a deeper dive into one of our more popular funds and continue to take a closer look at the past couple of years. First, I want to identify which North American equity funds had strong 2023s, but I wanted to put that back into perspective by looking at both 2022 and 2023. So now having a look at North American equity funds that have a 3-year track record and ranking them by the return in 2023. Here we can see several funds delivered amazing returns last year, with the top 4 posting returns greater than 34% and some as high as 40%. We can also see that in this order, the BMO SIA Focused North American Equity Fund sits around the middle of the pack. However, now by contrasting the 1-year ranking to the 2-year ranking, we can see that the BMO SIA Focused North American Equity Fund showing really competitive returns over 2 years, suggesting the benefits of the risk management in 2022. Additionally, the magnitude of the rebound last year did not have to be as great because of the position that the fund was in at the end of 2022. And now if we take a look at the performance chart of the top 4 performing funds in 2023 from the previous list, we can see a similar picture that in 2023, the return only needed to be a fraction of what other managers did due to the strong 2022. Here we're seeing ZFN outperforming all 4 of those funds over the period, and at the extreme, one of those top funds that was up 34% in 2023 over 2 years is still down 13% for the period. And here are the fund codes for the 4 funds discussed in this presentation. Thank you for joining me for this webinar this afternoon, where we looked at a few broad market topics for 2023, as well as taking a closer look at how the lineup of true tactical funds are positioned and have performed on an absolute and relative basis. We also looked at how these funds were defensively positioned in 2022, providing strong risk management in a period where many broad markets were down double digits, and how this defensive positioning set the funds up for a good recovery in 2023 and so far into 2024. If you have any questions or seek any additional information, please do not hesitate to reach out to anyone here at SIA Wealth. We're always happy to discuss markets or how True Tactical fits into a broader equity portfolio. And with that, thank you for tuning into the January Market Outlook webinar, and we'll see you in the next one.